Good evening. On behalf of Goodwill, I welcome you all. Okay, let us start our today's discussion. On behalf of Goodwill, I welcome you all for this discussion. And today we will discuss about the weekly outlook for Nifty and Bank Nifty index futures and options. So without wasting any time further, let us start the discussion. So what I'm going to do, I'm going to share you a screen. So I hope the screen is, everybody could see the screen. The chart what you're seeing is 1 hour chart for SGX Nifty index futures. So for analysis, I'm using SGX index chart, not the NSE Nifty index futures chart. The reason is quite obvious. I don't want to see any gap ups and gap downs. So in SGX, it looks like a continuous chart. So in order to identify or distinguish our NSE session, you could see the vertical dotted lines. All these vertical dotted lines indicate our NSE trading sessions in India. So let us start from analyzing what happened in this week from April 25th. So the market opened somewhere near 16,960 on April 25th. And after that price opening, so last week we expected the market to show some sort of downtrend. So the price continued its selling, but finally the price closed somewhere near or equal to the price opening itself. So what happened after this? These are all the price actions what you're seeing that happened in the Singapore exchange, SGX Nifty. Okay. So after that, the price moved up, went up and closed somewhere near 17,120. So on the next day on 26th, we had a little bit of gap of price opening in the Nifty index futures in India. So the price opened near 17,120, took support somewhere near 17,180s, and you had a decent higher closing somewhere above 17,160. So this candle indicates the price closing, but it looked very positive. But what happened after that in the SGX Nifty index futures, the price fell drastically, gave a bounce back, and our NSE opened somewhere near 17,040. So it came down, gave a bounce back and closed somewhere near the same zone. So the almost again the opening and closing looks more or less equal. What happened after that? Slowly, steadily in the SGX, the market recovered a lot, and it gave a opening just above the previous day's closing in the NSE Nifty index futures. So on 28th, so right after the opening, we had witnessed some sort of very strong buying that pushed the price above 17,260s, and the price closed near that. So what happened yesterday? The price came down in SGX, took support near the 17,080, and you had a decent higher. Opening for today. So what happened in our NSE, you could see the price maintained the trend. So it took support near 17,260, went up till 17,360, and by the end of the market closing, we had some sort of drastic selling. The price came down till 17,080 and closed near 17,120. So this is what that happened completely for this week. So to certain extent, we could say the price took support near 17,000 levels, and slowly, steadily, it went up near 17,360 and closed near 17,120. So in order to infer from whatever we learned comparing with NSE price action and the Singapore exchange price action, both traded both in both the exchange, only the derivative Nifty index is trading. So when we want to compare that, we can easily come to a ad hoc conclusion that, so after our market closes, when you see the most prominent price action, whether in the after evening session, if the SGX was dominated by buying, the next day in the NSE market, NSE futures, you can see some sort of buying that is happening. Maybe after the price opening, the price will take some support, some buying at major support, and then it moves up. So if you notice that on 25th also that happened. So on the next day, you could see on 26th, the market fell down. The next day also, you can see the impact on NSE. So it is a ad hoc type of conclusion you could infer from this price action. So it is quite necessary for you to understand what is happening, what had happened in the SGX index futures also. So that is the reason only for analysis what we will do. We are trying to use this SGX price. So this is one way of analyzing. So what I'm going to do, I'm going to decrease the scale to the maximum in order to have the overall market view. So I'm going to decrease the scale for 1 or 2 months. So from 2020. So yes, I hope it's quite clear, the chart, even though I have decreased the scale. So you need to follow the same yellow line what we followed last week. So what does this yellow line indicates? This line is nothing but 17,260. So this acts like a point of control, like we said in the previous weekly outlook session. It acts like a point of control. If you notice that by the end of every month, wherever the market moves at the beginning or at the mid of every month, you will see the market bouncing back towards 17,260. That happened around Jan. You can always see the date and time below. That happened around Jan, and by the end of Feb also that happened. By the end of March also that happened, and obviously by the end of this April, yesterday the contract expired. The price was trading again somewhere near 17,260. So you can easily see the price is consolidating within a very long range. So, but most of the time, if you see the entire price action, you could easily conclude that the market is little bit biased towards the buying side. It is not moving up, it is not moving down, but whenever there is a drop, it's giving us some sort of bounce back. So again, now the price is trading in and around 17,200. So now I'm going to enlarge this scale. So now the question is, for this month, for the May month contract also, whether we could see the same price by the end of this month. So there are a lot of chances for that also. So in order to understand what is driving this price action, what we can simply add a volume weighted moving average. So this volume weighted moving average for the last two weekly outlook sessions, for the last 2 weeks, the price was trading below the volume weighted average. Now you could see in the last two trading sessions, it broke this and it's trading somewhat above the moving average. But if you notice the last 2-3 hours, it is going to trade within the average. So it says another information that the market is going to be confused for this week. So you're not again going to get a very clear price direction. So the price can trade within a range of 16,800 and 17,400 for this week, coming week. Because the price trading near the volume weighted average, after testing 2-3 times the volume weighted average, price trading near the average, it indicates a sort of consolidation because the volume is not very clear. The another reason for this is, see, the whatever pullback we got in the yesterday's trading session might or would have happened because of the monthly expiry. Okay, so the monthly expiry, during the monthly expiry, there will be some impact because people closes all the options contract and the futures contract. So the volume could be biased. So that is another reason. So the gradual uptrend what we witnessed in the last two trading session might be because of the monthly expiry also. So with this, all this conclusion, what I'm going to do, I'm going to hide this. So we need, we use this volume weighted average just to see where the volume is playing its role. Now I'm going to share you another screen. So what I'm going to do, I'm going to share you another screen. It's okay. Now what you're seeing, this particular screen, what you're seeing is for the India VIX. So volatility index chart. What you're seeing is the volatility index chart. It's a 20 minutes chart. Okay. So there is some correlation between the price movement of the VIX and the index NSE in the Nifty index futures. They are inversely proportional, which means that when the VIX drops, the Nifty index moves up. When the VIX moves up, Nifty drops up. And you can easily notice that 22 is a resistance and 16 is a support and 18 is an intermediate support. So what happened last week? I'm going to enlarge the scale. So on 25th, the market opened with a little bit of gap down. So which means that the market, since the price opened down, that moved the VIX towards the 22 ranges. So where it found a resistance. So after that, if you see that the VIX was constantly taking a resistance around 22 and 21 ranges. So that was one of the reasons, since the VIX was dropping, that we could witness some sort of gradual increase in the price in the Nifty index futures. So that is the understanding. So now the VIX is trading somewhere near 19. And also for the next week, we have one holiday for Ramzan. So Monday, we will be having a trading session. On Tuesday, there's going to be a break. Then we have two trading sessions with one expiry and another trading session on Friday. So always a break within the trading week is not good. So how we could project this week? Now, in the last two trading sessions, we had witnessed that the market came down and closed below 17,200. So that is very important. So on Monday, you need to see the market whether it is trading below 17,100 or if the price is going to open above 17,200. So if the price is going to open below, you can easily see the VIX moving up and hitting towards 22. So from 19.4 till 22, to what extent Nifty index futures can drop? That is one question. So the answer is to an extent of 16,800, which is the weekly low for this current week. So to that extent, if you see a price drop towards 16,800, we could project that the VIX will be moving into the territory of 22. So again, it's going to find a resistance, which means that the price can drop, still it can move down. This is one observation. If you see the price opening, a lower opening on Monday, and Tuesday you have a holiday, a lower opening on Monday, if you see a drastic fall, so 16,800 will be an area where you can go for buying, but it will be against the trend. So, and this is one possible way. The other possible way is the market recovered and it is opening somewhere near 17,300, which is the average today's high. So Friday's market price actions average high. So if the price is opening near 17,300, the VIX will be trading somewhere near 18 or below that. Okay. So this is how we need to correlate the price actions, both the Nifty index futures and the VIX. So the VIX, it's having some space if the market needs to move up. So if it is moving from 18 to 16, you could easily see Nifty moving towards 17,600. So these are all the various projections you could get based upon this week. So what I'm going to do, coming back, I'm going to stop this screen. I'm going to share the SGX chart again. So I'm going to enlarge the scale. Now we can easily visualize these things, certain things. Before doing that, what I'll do, I will add two trend channels in order to understand the trend. So this is one uptrend channel. So what can possibly happen? The price can move towards 17,000 or 16,960. The moving average is trading like this. So you can expect, if the price is staying below 17,000, it's going to be a very close watch zone. If the price is opening down below 17,100, it can easily push the price towards 17,000, where you could see the base bottom trend channel. So if the price is going to stay below 16,950, so it indicates the market is going to test the major support. You call it as a pivot, you can call it as a support, but it had provided the entire support for the month of March. So the price can easily come and test 16,800. So this is the observation. So I'm going to delete all these annotations. So to avoid confusion, I'm going to delete all these annotations. Okay. So the projections are, the market price opening on Monday is going to play a very key role. If the price is going to open below 17,100, this uptrend channel indicates that anything below 17,900 is going to be dangerous for this path, trend path. The second observation what we can get from this trend channel is, if the price is opening somewhere near or above 17,250 in this range, there are possibilities that the price can move towards 17,550. Maybe if I decrease this scale, you will get it right. So if the market is opening near 17,200 or within the range of 17,200 and 17,300, there are a lot of chances that the price can move above this mid trend channel that can push the price towards 17,660. So where it can find a resistance. So the price trading range will be within 17,000 and 17,600. Since the price is trading in and around the volume weighted average, there are chances that the market can move sideways in favor for buying. So there are chances that the market can stay in favor for buying, because on seeing the wicks, we could get a feeling that the price can again jump from 19 to 22. So there are chances once the price reaches 22 very easily. So there is a lot of room for the VIX index at 22 to act as a resistance to push the price down. So you could obviously see the price trading around 17,600. So all depends upon the price opening and price action, what is going to happen on Monday. So Monday's price opening is going to be very important, because that will give a clear direction for the traders. At present, like us, most of the traders, they will be confused on saying all the month in the last in the month of Jan, Feb, March, April, 4 months, the market, the end of the market is closing within a same range. So they will also wait for the price direction. So it is very important to see where the market is going to open. If it is going to open above 17,200, it gives a different message. If it is going to open below 17,100, it is going to give a different message. So in order to avoid certain confusion or to get more clarity, I will try to add another trend channel. So I'm going to decrease it. So I'm not going to explain in waste time how I draw this trend channel. These are all manually drawn trend channels after seeing various combinations. So on seeing this trend channel, this also gives us an indication that the price will be trading within the range of 16,800 and 17,600. So this also gives us a conclusion that this is a downtrend channel. So if at all the price is moving down, it says that it will come down and take support near 17,800 and 17,600. From there onwards, the price will be trading within the range for the next week. Since we have only 4 weeks of trading, so 4 days of trading session. Even if it is moving up, it's going to have a close range between 17,600. So it's going to be a range bound market for the next week for various reasons. The reason number one, VIX does not give us a very clear message. The second, the volume is a neutral volume. Whatever it's playing is a neutral volume. Since it's a neutral volume, the price is likely to move within a range or sideways. That is the second information. So with all this information, how we can trade in the options market? That is another question. So normally we will take just 1 minute. Okay, fine. So normally what we will do, we will look for the monthly options. So in Nifty index futures, let us check a few option strikes. So I'm going to share this new screen, which is 17,600 C. So the chart, what you're saying is for 17,600 call option strike for May month monthly expiring contract. So since it is a call option, we need to look what are the areas where you can buy. So the price, if you see this particular strike price, for today it was trading around 200 to 220. It could not move above that, fell down and closed near 140 and 160. So in this chart, we have marked another range also, which marked us in a blue zone. It's a 40 to 60. So this particular zone indicates 16,800 to 16,900. So that was the range. So what you can do, if you have an idea to buy any option, buy a call option, when the price is reaching 16,800, what you need to do, you need to look for 17,600 call option in the May month monthly expiring contract. You can buy this call option when the price reaches around 40 to 60. Okay, so that's the reason we are looking for this 17,600. Use this only if you want to buy at the bottom. The other case is, if you want to see the other case, if the market is opening near 17,200, or if the price is moving above 17,300, you can still use this 17,600 call option strike once the price start moving above 220. So this particular top zone, that's a breakout zone for this particular strike. If you see this strike moving above 220, you can buy this by placing stop, or from there onwards, you can go and buy till 140 by placing stop at 120, expecting the price to still move further. So if you have the buy angle, if you are biased towards buying a call option or staying as a buyer, or if you have a bullish view in the market, you can use 17,600 call option. So now let us see what are the other option strike you can select. So wait, I will. Okay. Now let us analyze this 17,500 call option. If you want to be a little bit aggressive, so if you want to buy a call option when the Nifty index futures hits 17,100 or 17,000. So these, whatever we are saying, these are all very key level that acted as a very key level earlier. So if you have any view that you want to buy Nifty index futures around 17,000 or 1,700, you can select this 17,500 call option and you can buy this call option whenever the price reaches 80 to 60. Or if you see the market opening above 17,200 or 17,260 on Monday. Okay, so if you see the market opening above 17,260 on Monday, obviously the price will be trading above 220. So what you can do, you can go for buying till 160 by placing stop at 140, or you can extend your buying till 80 to 60 also, maintaining your bullish view. So use 17,500 call option strike or 17,600 call option strike if you have a bullish view. So I'm going to share another screen. So what happens if the market opens lower? So maybe near 1700 or near 17,000. So if you had a, if you have a gap down price opening, so what you can do? Now let us see a few option strikes. So the chart, what you're saying is 16,600 put option strike. The chart, what you're saying is 16,600 put option strike for May month monthly expiring contract. And in this, you could see today the price took support near 100 and 120, went up and closed above 160. If you see price opening near 1700 or below 1700 or below 17,000 on Monday, it means that the market is going to trade above 200. So what you can do, you can select this 16,600 put option. You can go for buying at various intervals like 160, 120, 100. Till this range you can go for buying by placing stop at 80, expecting the market to continue its selling or to maintain its bearish view or downtrend. So what you can do, you can have 16,600 put option for the monthly expiring contract. Now what I'm going to do, I'm going to share you another screen. So now we saw 16,600 put option. Now we need to look for other put options also. Okay. So now the chart, what you're saying is for 17,200 put option, and it's quite an in the money put option. So what you can do, you can wait for the price to come and hit a zone 100 or 120. So wait for the price to come near this zone and you can buy this put option, expecting the, so assume that the market is moving up. So in what situation you should use this 17,200, which is quite an in the money put option. The market opened, assume that the market opened near 17,200 or 17,300. It's moving towards 17,600. And we know that as per our expectation, the market will be trading within a range of 17,600 and 16,800. If the market reaches 17,600, the VIX will be around 16, which means that it will act as a resistance and push the price down. By that time, you will see this 17,200 put option trading around 120 and 100 levels. So by that time, if you want to pick the top, sell on top, what you can do, you can select this 17,200 put option and you can go for buying this put option when the price reaches 17,600. So these are all the various options available for trading in the options market. Now what we can do, let us go back and see what we can do in the Bank Nifty index futures. So the chart, what you're seeing is the Bank Nifty index 1 hour chart. So Bank Nifty index futures is not, the chart is very clear. There is no confusion in this chart. We could easily say that the blue color zone for the last 4 months, the blue color zone marks 36,600 and 37,200. The price was trading for during the month of January, it was trading above the zone. So you could divide this entire chart into 2 zones. the price actions above the zone and the price action below the zone. So in the recent time, you could see whenever the market reaches or enters within the zone, it struggles here, and this 36,600 is acting as a resistance. So you can expect, if at all the selling continues, you can very well expect the market to come and hit 35,200, or if the selling continues, it can reach 33,600 in near term. Unless until you can go for selling or extend this selling till 37,200, unless until we get a closing and opening above 37,200, you can still expect Bank Nifty index futures to continue its downtrend. So when we compare the Nifty index futures chart and the Bank Nifty chart, certain things are quite clear. The Bank Nifty shows that it's completely dominated by the sellers on certain areas. So we could easily draw this zone, but in the Nifty index futures, we could not do that. But you should be very careful with the Bank Nifty index price action. If the price is going to trade within this 36,600 and 37,200, you should be very careful. So the market will swing this way and that way. Once you get a price closing and opening above 37,200, then we can constantly go for buying. Till then, we can maintain our selling view. So 35,200 can act as a support, and 33,600 also can act as a support. Like what it did earlier by the end of March, you could see this 35,200 acted as a support and pushed the price up. And what are the strike we can select for this Bank Nifty for options trading? Let me share you, wait for a while, I will share you the screen. So this is the option premium chart for 37,000 call option strike. And this is for the monthly expiring contract. We always deal with the monthly expiry. So here also we have marked a big blue zone, which marks the area of 600 to 700. See, it's very easy for us to pick the zones in the option market rather than in the futures market. The high is around 700. So if the price is trading above 1700, what does that mean? It means that the price is trading, the index futures, Bank Nifty index futures is trading above 36,600. So that's the reason we have marked this zone. This is 37,000 call option strike. Watch this call option strike. If the price is moving above 700 or 720, you can buy this call option by placing stop loss below 560, or you can have a 100 or 150 point stop, expecting the value to increase. So if you are if you want to have a bullish view, just monitor 37,000 call option. Now I am going to add another screen for options trading for Nifty, Bank Nifty options. The chart what you're seeing is for 35,500 put option strike. For it's also for the same May month monthly expiring contract. So now what you could see, the price is trading in this particular chart. You can see the price, it's trading within the range of 400 and 600. The price is trading within a range of 400 and 600. So if you see the market opening with a gap down or trading within the range, you can very well go and buy this 35,500 put option till 400 or till 300, or you can extend this buying till 200 also. Okay, you can extend this buying till 200 also, expecting the market to continue its selling. Okay, so what are the views for buying this 35,500 put option? So if the price is trading near 400, it means that the market is hitting the major resistance of 36,600. So that's a very good area for you to go for buying a put option. If the price is trading near 200, it means that the price is trading within the range of that particular. Can you remember the blue line, blue zone? That is 37,000 or 37,200. So that is a major zone. So if you are extending your buying from 600 till 200, it means that you are testing the entire selling zone. So it also makes sense. Okay, since we don't expect a single way price action for the month of May. We are not expecting a single side drastic price movement for the month of May. So we are expecting a sort of zigzag price movement maintaining its trend. So it makes sense that if you focus on this 35,500 put option. So with this, we are coming to the end of our weekly outlook discussion. So thanks a lot for attending our weekly outlook discussion. Thank you very much. Take care. Bye.